Welcome to my daily report market videos with me, which is very market analyst at Hantec on Friday the 14th of June. Well, we've got a continued move towards safety in markets. We had that incident with the oil tankers being attacked in the around the Strait of Hormuz in the Gulf, the Persian Gulf yesterday, which really did see a move into not only oil, where the oil price pulled 2% higher. We also saw gold, which now continues to run higher. Gold is actually pushing above the 1348 level of its 2019 high into the 1350s now. That is levels not seen since April 2018, and it is a really strong move. We've seen that safety is the way to be at the moment. The yen is outperforming. As I said, gold is outperforming. We've also got treasury yields which are pulling lower. We've got equity markets under pressure, and now we've started to see, interestingly, the oil price falling back. Now that spike in the oil price helped equity markets yesterday, but the pullback on oil today has certainly not going to help equity markets in any real way. We've seen the S&P 500 futures, as the European session has really kicked into gear, we've seen the S&P 500 futures starting to drop back into negative territory. That's weighed on the equity markets today. So this is all working into a risk-averse bias on markets at the moment, and certainly gold holding above that in the mid-1350s sort of is reflective of that. Now, today, focus turns on to the US consumer in the data. We've got a couple of key indicators for the US consumer today. We have at 1:30, we've got the retail sales expected to show growth of 0.3% on the month on the ex-autos, which is the core data. Just in between, we've got the industrial production, again 0.2% higher on the month, but at 3 o'clock, I think this is the important one. This is the Michigan sentiment. Now, around about 70% of the US economy is consumer-based. It's based on household consumption. So the consumer is all important in the United States. And you can see here that recent months have certainly meant that the consumer is looking still pretty strong in the States. Michigan sentiment picking up throughout the last few months. Now, how that indicator moves today could be a significant impact on the Fed, I think, in next week, because obviously at the moment we've seen forward expectations still pretty strong at multi-year highs, actually. On the Michigan sentiment, but current conditions are falling away. Now we need to see the expectation is for 98 on the Michigan sentiment indicator, which is this yellow line here, which is effectively made up of the blue line and the pink line. 98 would still be pretty positive, so I think that this could be an interesting indicator today. If that is sharply below 98, then we could see further move towards risk aversion today. So, looking forward, my chart of the day is the Australian dollar versus the yen. Now, this is a key indicator of risk appetite, and obviously what we've seen is markets selling risk at the moment. So subsequently, you see the move into safe havens. Yen strength, Aussie underperformance pulls Aussie dollar lower against the yen, and we've seen that break down again below the support at 74.94, which basically continues this corrective move lower on the Aussie versus the yen. Now, there was an implied downside target of 74.25 area from this mini range a couple of weeks ago. That is still a level I think I'm looking out for on the chart, but 73.07, look at that, was the January low on a spike, but also coincided with the 2016 low as well. So it certainly looks as though the market is on course towards testing that level. Look at the momentum indicators. Acceleration lower on the stochastics. RSI back under 30, having failed at 40. This all points towards a pretty negative outlook, I think, on these indicators, and for Aussie yen at the moment. You'd be selling into intraday strength on the Aussie yen. You can see that on the hourly chart. Negative configuration on the hourly RSI, failing around the mid-40s, back under 30. You've got the stochastics negatively configured, the MACD lines negatively configured. Any strength is being sold into on this indicator now. You can see that yesterday's rebound basically failed around that around that 74.95 low, fell over. We've got the today's level rebound, intraday rebound, 74.80, failing there, which is basically yesterday's low, moving to new lows. So it is a continuation of this selling into strength that we see in the recent days on Aussie yen. And with that in mind, I wish you good luck in your trading, and I will speak to you later.